The backend just flagged a clean split. SPX printed a weekly bullish reversal, while the Nasdaq clocks its third straight bearish week. Two different reads, same market. We close on today's top-ranked stock and ETF. Stay with me. SPX and QQQ are running different reads this week. The S&P printed a bullish reversal on the weekly chart, while the Nasdaq clocks its third consecutive bearish bar. And the June peaks are still capping both from above. What's interesting, the equal weight S&P is posting higher highs and higher lows, which says the broader market is growing beyond just large cap tech. One thing the system picked up? High-yield bonds haven't followed stocks higher since about April. The 10-year is holding near 4.5%. That's the system's near-term over-under for the bond read. DXY reclaimed 101, but momentum is fading, so the dollar is a mixed read here. Wednesday's the key event. FOMC minutes drop for the first time under new chair Warsh, who already wiped out traditional forward guidance. No dot on the dot plot, a stripped-down statement, 5 task forces reviewing everything the Fed does. The 30-year is the level to lock on. It just tested a resistance zone not seen since before the financial crisis. Energy's the clearest directional read the system is running right now. It's bearish. WTI has completed its war premium round trip and is sitting near recent lows, with OPEC Plus set to add close to 200,000 barrels a day in August supply. XLE is tracking lower lows, and the sector isn't finding a floor. Metals are a split read. Gold has partially bounced from its correction, but the miners are lagging hard. They haven't kept pace, and that spread is the tell. Hawkish signals from the new Fed chair, combined with elevated bond yields, are keeping a ceiling across GLD and the broader sector. Silver took a steeper hit in the correction and hasn't recovered as far. The international picture breaks into two separate stories. Developed markets had a solid week. The DAX hit a weekly high, and EFA closed up over 1%. On the emerging side, the scan keeps surfacing a structural divergence. Chinese equities are posting their worst relative performance against the rest of the world in 25 years, and large funds are rotating out of EEM into US tech and AI names. The gap between developed and emerging is widening. Bitcoin is bouncing, and the read here is genuinely mixed. It closed above its 20-period moving average on Friday, and multiple indicators flipped bullish. There's real energy in the move. But the structure still points to a bigger downtrend. Bitcoin is down roughly 54% from its January 2025 peak, and the volume hasn't confirmed the bounce. The chart shows stiff resistance not far above where it's sitting. This is where the scan does its job. SignalFinder Pro has filtered the whole market down to 103 symbols showing genuine relative strength. The top 3 sectors are on screen now, and from here, we drill into the number 1 ETF and number 1 stock. The sector board has industrials at number 1 and technology at number 2, both flagged as leading. Real estate is in third, but it's marked lagging. There's a quality gap between the top 2 and where the ranking drops off. Technology outperformed on the session. Industrials held steady. That spread at the top is what the system is tracking. The number 1 ranked ETF from today's best of best is KRE, the SPDR S&P Regional Banking ETF. Regionals have been part of the broader rotation the system's been tracking into financials and lower vol names over the past month. KRE moved close to 1% higher on the session, and the chart structure has been building. Moving to the top-ranked stock, that's ANET, Arista Networks, a networking and data center infrastructure name. It had a strong session, up over 8%, which is a significant single-day move for large cap. That's exactly the kind of momentum the system flags when relative strength and structure align. The chart has been building, and today's session pushed it to the top of the ranked list. Quick readout. SPX posted a weekly bullish reversal, while the Nasdaq is 3 weeks into a bearish sequence. Macros on edge with FOMC minutes Wednesday and the 30-year near a post-GFC resistance level. Energy's bearish. Metals, internationals, and crypto are all split reads, with China's structural underperformance standing out in emerging markets. In the best of best, industrials and tech are leading the sector board. Today's top ETF is KRE, and today's top stock is ANET, up over 8% on the session. Verify both live in SignalFinder Pro. And remember, this is educational, not financial advice. Always do your own homework.